Gurmeet Chadha, the managing partner and CIO at Complete Circle, also on board. Gurmeet, thank you so much for taking time out and joining us this afternoon.
Hi, thank you for having me.
Well, absolutely. The first thing that, of course, there's a lot of moving pieces when it comes to this puzzle. But first things first, I wanted to understand if this is largely the move today that we saw coming in. Is it largely, according to you, on the back of that trade deal optimism, or are there more legs to the rally? What are you seeing in terms of factors, first things first?
No, I don't think so. There is enough of a move considering what has happened. I don't think so. 100 points Nifty is too much to be discussed. In fact, my sense is the market reaction has been more softer or lukewarm considering the fiscal and monetary push which has happened. So if you see, we have now lower rates. We have RBI timely managing liquidity. We had a rating upgrade after 18 years, so that also hasn't moved both equity and bond markets much. And then you have GST 2.0, which my view is a very significant step in terms of boosting demand and consumption and overall growth. So I think somewhere probably the FI positioning is still on the shorter side. They are net short, barring maybe yesterday's one odd figure. There's been persistent selling, and that's getting reflected in the market. So I think the bigger trigger in the market would come. Obviously, any truce with US and withdrawal of tariff is could be a short-term trigger, but I think a sustainable long-term trigger is double-digit earning growth. And I think all these reforms, when they get reflected in earnings and also volume growth with pricing, is when you'll probably see a more durable or maybe a larger move rather than just 1 or 2% here and there.
Okay. Gurmeet, morning. Hiral on this side. Sorry, afternoon, in fact. Okay, so from here on, what is the feeler that you're getting if the FIs are expected to come back? Because we're talking of FIs who are still holding short positions, if you have to look at on the derivative side. So we're talking of a combination of a bull market correction phase that has already been ongoing. There is an extreme FI short position that is being held right now. And a combination of these two historically have always signaled end of a correction stage. If that is taken to be into consideration, and if you're going to see a reversal, where would you put your bets then at this juncture?
So, Hiral, as I said, wherever the earning visibility is there, in fact, if you see wherever the earnings are strong, the markets have rewarded even in this environment. So look at, for example, selective pharmaceutical names, both in hospital as well as CDMO. Look at a Laurus Lab making a new high. Look at all hospitals now trading at very premium valuations with good earnings. We've seen that, in selectively in auto also. Look at TVS, for example, very solid earnings, and the stock is just run away. It's nearing all-time high at about 35, 3,600 odd levels. And we've seen the other way, within same sector stocks, not doing that well and markets not doing. So I think, my view, there are pockets, where we'll see earning recovery. I think financial is one pocket, starting with NBFCs first, bank maybe with a lag of 1 quarter. So, the consumer demand beneficiary in terms of a Bajaj Finance, a Chola, a Poonawalla. Similarly, gold finance NBFCs, I think, are looking very strong in this environment with gold prices also picking up. And then I think at some point of time, even capital marketplace, because once the market sees more activity, more volumes, I think the depositories, the AMCs, and at some point of time, maybe the brokers, which are right now a little worried because weekly expiry may go, may come back. The other pocket is, as I said, auto. I think I've been speaking to a lot of dealers. Some of them happen to be our large clients. I think the festive season demand will surprise everyone. Yesterday, in one of the NDTV events, the Maruti Suzuki team said that the small car number has been -6% for last 2, 3 years. In fact, they may expect a +10% swing in small cars, right? And Maruti has moved up, notwithstanding today's move. So I think auto consumption, selectively pharma, some selective pockets of, defense and power. I think these are the pockets I'll be focused on. And once you get a 12, 14% earning growth, and if your Nifty is at 21 times, that means your peg goes below 2. I think that's when you will see a more durable and a more broad-based buying coming even from FIs.
Where would you place IT at this point in time? 2 consecutive sessions of uptick that are coming in after that Infosys buyback announcement. In fact, yesterday's session itself, if you see the market cap increase, spectacular. 25-30,000 odd crores is already added with that 4 to 5% kind of gain. Today, a similar scenario right now. Do you think this is the time is ripe when to enter IT as a space right now?
Not really. I'm a little underweight right now.
Okay.
Tactically, maybe yes, you may see some pullback coming on any relief on tariffs or and announcements on buyback because IT companies are sitting on cash. A lot of them are at what 5-6 times free cash flows in terms of the high dividend yield of 3-4%. So I'm just saying from a valuation point of view, from a free cash flow point of view, there may be a tactical bounce. I think the bigger up move will come when you'll have the learning phase of AI, which is the application part of it. Right now, I think it's more about chips, GPUs. If I were to simply put it, the hardware part of it, right? I think once the application part of it comes, I think a lot of Indian companies, especially tier two mid IT companies, will come, and because their ability to pivot would be much more than the larger ones. I'm not ruling out the larger ones, but I'm just saying from in terms of agility and companies. And other than that, the companies which are more IP led and not just software services led. Something like a KPIT, Persistent, some of the other names like Coforge, etc. might just make a quicker comeback. But as I said, I'm right now not. I'm actually underweight IT. I would wait for broader commentaries to improve. I don't mind entering 5-10% higher. But once the commentary improves, I know where to position myself in rather than just be tactical about it.
Well, absolutely. Thank you so much, Gurmeet, for joining in with that entire update. As far as what you think about all of these sectors, thank you so much for taking time out. So.